Industrials finally have their week in the sun, up 5% last week and up 17% in October. Stephanie, you have long been committed to this group. Would you be taking profits now after this monster run?
You know, we bought in the decline, so we've actually been trimming a little bit, but we're still overweight the group. I still believe this group has more to go, particularly between now and the end of the year, as portfolio managers kind of chase performance.
I was going to say, because for the whole year, according to Capital IQ, they're still down about 2%. So if an investor missed the move altogether, can they still buy at these levels, and what name's the best?
Well, what's interesting, Alex, is that they've moved, but they're still down substantially from their highs, right? I mean, Cummins is down from 116, Caterpillar down from 115, DuPont down from 57, Johnson Controls down 43. So you have so many examples of, yeah, they've had a nice bounce, but they have a long way to go if they can get back to kind of more normalized earnings. Now, I don't know if they can, honestly, but I would say that between now and the end of the year, I do think there's enough momentum there. I do think there was better earnings guidance. It wasn't great, but I don't think it was horrible. And I do think if you get China soft landing, these stocks will work.
So what does that mean, work? Does it mean that they'll just sort of trend higher a little bit, or are we going to see a big spike, or do you think that they could decline in the short term before they start to take in those fundamentals?
I think these stocks don't go down that much, honestly. I think that they could kind of buy some time a little bit, but I think between now and the end of the year, they could rally pretty substantially. They have such a beta group that if people want to make up performance, they'll certainly benefit if they own some of these names.
And like you said, is China the biggest risk for this group, or is it still Europe?
Well, I think that China is most important. The BRIC countries are the most important, but I really feel better about China at this point. I mean, I don't know if they're going to grow 7 or 8%, but they're not going to grow 5% or 4% or lower. So I think if you can do 7, 8, 9% in China soft land, you have them even come out and say they're not going to tighten anymore, even if they don't ease. But if they just don't tighten, I think there's a huge catalyst for these stocks. And at the same time, the U.S. is actually doing a little bit better. And look at all the manufacturing data that we've gotten over the last couple of weeks, including this week with the PMI.
Right, exactly. So are there any other names you'd be looking to add to your industrial position that you were kind of shying away from when China and the U.S. were sort of risky?
Well, there are two names that we added into the massive decline around October 4th, and that was Weyerhaeuser, which is not a true industrial, it's more like a material, but it is kind of in that same theme, if you will, and Eaton. Both positions are still pretty small. They really took big bounces, after we started to buy them. So those are two names that I think if you see a pullback, you would want to buy them, particularly since I think the Weyerhaeuser has seen a trough in terms of their earnings. Eaton actually has momentum in their earnings, which, so you could kind of balance the two, if you will. One's a little bit more, the visibility is a little bit better in Eaton. Weyerhaeuser's a little play on housing, but I do think that it's troughing and very cheap with a good yield.
All right, thanks, Stephanie. I appreciate it. So if you missed the big move in industrials, do not fear. There is still opportunity to run. Just pick the right names.